S&P 500 Index Weekly Chart Analysis. Recent trends show signs of recovery with bullish momentum. In recent weeks, the S&P 500 Index, SPX, experienced a significant decline, breaking below important support levels. However, the market has shown signs of recovery, with the index regaining most of its losses. This video will analyze the current chart analysis of the SPX and discuss the factors contributing to its recent rally. Chart analysis. Last week, the SPX witnessed a series of steep rallies, with support levels being regained and the previous week's losses erased. This week, the index achieved an upside breakout by closing above its mid-October high and its declining long-term trend resistance line. The Nasdaq 100 Index, NDX, also experienced an upside breakout, further adding to the bullishness of the market. The simultaneous push above resistance levels by both major indexes suggests a continuation of the rally and the potential for higher highs in the coming weeks. Market factors. Despite concerns such as Moody's downgrade of the United States government ratings outlook and falling consumer sentiment, the stock market has remained resilient. Moody's cited rising risks to the nation's fiscal strength due to large fiscal deficits and weak debt affordability. Additionally, consumer sentiment fell for the fourth consecutive month, primarily driven by worries about higher interest rates and geopolitical tensions in the Middle East. Ken Griffin, head of Citadel, a hedge fund manager, expressed concerns about higher baseline inflation caused by structural changes leading to deglobalization. He highlighted the impact of this inflation on the cost of funding the U.S. deficit and criticized the government's spending spree. Furthermore, economic indicators such as the trade deficit, mortgage rates, and unemployment claims have influenced market sentiment. The trade deficit widened in September, imports and exports rose, and mortgage rates declined to their lowest level in 5 weeks. However, the number of Americans filing for unemployment benefits remained close to a 7-week high, indicating a cooling labor market. Conclusion. Despite the challenges and concerns in the market, the S&P 500 Index has shown resilience and a bullish momentum. The recent upside breakout and the simultaneous breakthrough of resistance levels by major indexes suggest a continuation of the rally. Historical trends indicate that the November-December period tends to be bullish, further supporting the potential for several weeks of profits. It is important to note that market breadth should be closely monitored, as the recent rally may not have been supported by breadth. Additionally, the bearish crossover of the NYSE advanced decline lines, 50-day and 200-day average lines, raises some concerns. Overall, the current position of the SPX in this strategy is bullish, indicating a positive outlook for the market in the near term. However, investors should remain vigilant and closely monitor economic indicators and market breadth for any potential shifts in sentiment. Disclaimer. This video is for informational purposes only and should not be considered as financial advice. Investing in the stock market involves risks, and individuals should conduct their own research and consult with a financial advisor before making any investment decisions.